Hey traders, Raghee here. Happy Friday, everybody. Hope everyone is doing great. Well, it's been a tough week, but still, I hope everyone's doing great. We're going to talk about some of the things that I've been doing in terms of shifting. So good morning, everybody. Great to see everyone. Okay, so if this is your first episode of Charts and Coffee, welcome to my office. And again, happy Friday. Yeah, so CW says, thank God it's Friday. Hey, let's see what this market has in store. We're taking a look right now on the chart of the daily time frame of the S&P 500. And you can see right now we're forming an inside day. If you're not familiar with this is a really classic, simple pattern. It's not a candlestick pattern. It's just a price pattern where the current range of today's S&P futures candle is trading within the range of the previous session. Now, the previous session, that range was a Lulu. That was a giant range. So forming an inside day is, in one part, sort of not that surprising. But on the other hand, psychologically, it's very good to see that the market is not pushing down to lower lows in more panic. In fact, it's really good that yesterday as we closed, we left that wick behind. We didn't close down near the bottom quarter of the candle range. We actually popped back up and left that wick behind. Little clues that, maybe, and there's another thing. Look, I'm not a fib practitioner, to the degree that, say, Fib Queen or even Trader Tammy are, but, basic things. I've been doing Fibonacci analysis, like a lot of us do, understanding the sort of mathematical nature of the market. I mean, that's what Fibonacci is, right? And I'm not wondering if we don't see a little bit of symmetry here in terms of the pullback that we saw in January and now what we're seeing in early March. Not quite. It's not spot on, but I'm not wondering if it kind of pops out at me. It popped out at me last night. I was doing a little bit of research and I was running it by my trading partner here in the office. I said, "Hey, what do you think?" And she's like, "Yeah, I can kind of see it." So maybe. All right. So with that being said, great to see everybody. It's been a trying week. I've been hopefully really transparent about A, it's been a trying week, right? B, we have to refocus, right? We can't look, I love dip buying. And I'll tell you what, I've grown portfolios that way. I've grown accounts that way. But dips actually mean they necessitate a trend, and trends are what are breaking right now. So let me show you one other chart maybe one or two other charts before we go ahead and segue over to Q&A. Notice the way in which the Dow is holding the wave a whole lot better because it's not weighted so heavily with tech the way the S&P is. Notice how much better even the Russell, okay? Now, let's do another thing. Remember, when the markets start to sell off, when they're rallying, gang, play broad-based, play the indices, play the sector ETFs, go broad. You want to bet on everything, right? But when the markets start to get choppy or do what they're doing right now and you still want to be a bull, you've got to then transition to what's still en fuego right now. Do you think whether Operation Twist happens or not, and boy, did Jerome Powell pretty much crush the expectations of Operation Twist potentially happening. I don't know what that was, show of bravado, whatever, full-on delusion, whatever, he's the boss, but he pretty much crushed expectations. And you saw the way the market took a nosedive. That was happening shortly after 12:05 p.m., and he basically took that, for now, really off the table, and the markets responded in kind. And you saw the bond market sell off. And one of the things that I mentioned, can't remember if it was in Charts and Coffee or when I was doing the open in the futures room, but whenever we have a narrative like, will or won't there be Operation Twist? Or even another narrative that was happening yesterday is, will OPEC increase production or will they leave production cuts as they are? We have to have a price-based, a chart that we can look at and say, oh, this narrative is playing out. So you could see very quickly after 12:05, the Operation Twist narrative unraveled. I mean, like Wile E. Coyote style, right? Okay, so are there parts of the market that are still absolutely strong and they could care less whether we're doing the chubby checker or not? It doesn't care about twist. Notice that oil services, energy, oil exploration, regional banks, financials, they're still holding their own really well. One part of the tech that was holding as a relative outperformer for a while and got absolutely KO'd was semiconductor, and that was unfortunate. All my cards on the table. If there was any part of the last few weeks and months that I was playing successfully to the upside, it was, hey, heck with consumer discretionary, heck with broad-based tech. Let's focus on semis, and even that got rocked yesterday. So it's been tough. All right, and thank you so much again for always joining us for Charts and Coffee. We keep it real here, and right now it's been pretty tough. It's okay to look back at the last week and say, as long as I didn't, as long as I got a lot of paper cuts and didn't lose a finger, we're okay, right? And that's what I always try to remind my traders: take the paper cuts, right? Come back to play. Don't. It's like in UFC versus boxing. I don't want to get knocked out, right? I'd rather tap out than get knocked out because I can come back and fight again. All right. So, hey there, editor. Good morning. Do I think Apple and tech sector will rise again in 2021? Oh, gosh, editor, it's so early in the year, right? If we went back to March of last year and we looked at what we were dealing with this time last year, it would be a completely different narrative in terms of what hang on one sec, gang. It will be a completely different narrative in terms of, sorry, I just screwed up here. Give me 1 second, gang. All right. So anyways, there we go. Okay, sorry. I got so many rooms open. I got my Sector Secrets room open. I got my futures room open. So anyway, let me make sure they're all muted. All right. So let's make sure that I'm not broadcasting in 17 different places. I am not. All right. Sorry about that again. Technology. It's amazing, right? So editor, we're so early in the year. Think about what was happening in March of 2020 and think about what happened subsequently. Now, I'm not saying we're going to see that kind of rally because what we saw was an unprecedented amount of backing by the Federal Reserve. Look, the Federal Reserve bought high yield corporate bond and junk bonds last year. And that alone was probably outside their purview. It's, when the markets are tanking and the economy is under the weight of a pandemic, it's not the time to ask whether what the Federal Reserve is doing via the Treasury is actually legal or not. That wasn't the time, although there was a lot of discussion about it. They did what was necessary. And what was necessary allowed the market to rally the way that it did. So I'm not saying we're going to see a 2020-esque type rally, but gosh, no, I don't think we're going to be down here forever. In fact, shift time frames, right? That's something I talk about a lot in the futures room. If I'm a day trader and I'm operating looking at the YM on a 1 minute chart, right? And I'm doing this kind of stuff, looking at different setups on a 1 minute, tick by tick by tick, trading until maybe 11:30 in the morning, looking at the day trading opportunities, right? If I'm doing that and then I transition to a 15, I've changed my time horizon. What is the difference between time frame and time horizon? The interval of the candle, as opposed to how long you could possibly be in the trade. I go 15 to a 1 hour. Not only have I lengthened the time interval, I've lengthened the time horizon once again. When the markets get really choppy, especially when they start to sell off, again, it was really interesting. I was talking to my partner here in the office, and, one of the things that we're always doing here in terms of figuring out what to do with the futures or the Sector Secrets mastery, and she handles all that kind of planning. I said, what's really interesting about last March is I probably added more to my longer term portfolio, not to mention I was buying puts like a crazy lady, which was great, but I was adding positions to my longer term portfolio. Not massively, but all those individual names that I was waiting to see go on sale, it's hard for me not to mention Tesla. A lot of conversation about Tesla, a lot of conversation about Cathie Wood and ARK. And, one of the things that Actually, I was talking this morning to my husband about it. He said, I wanted to buy some Tesla. I said, well, it's on sale, $300 off. Who doesn't like that? And so, that's one of the things we were talking about. He's got a limit order, an alert, waiting down at the 200 EMA. A few weeks ago, that seemed like lunacy. Right now, I don't know. He might get his price. So that's what I mean. So when he's building, and this is, a lot of you might have remembered, I did a class called Market Money Math, and I showed you guys how my husband built his portfolio. He said, look, I don't need to be in the market every day. I just want to place those alerts that tell me when the market is giving me a price that I'm willing to add to a longer term portfolio, or even a trade. It doesn't matter. I hope that resonates with everybody, which is, please don't just limit your world to indices and stocks, because some of the things that we're in right now are markets like copper. And I plan on being in copper in days and weeks. We just bought copper yesterday via either copper futures and Freeport McMoran. Gosh, we did something so old school cool. I love it. We bought corn. Corn's already up. So reflation is not going to land at the doorstep of stocks all the time or even immediately. Technically, tech should be doing really well in reflation. It's not. So what do? We look for other markets that are still trending. So, editor, I know that was a big, long answer to your question, but I think it's the philosophy that got me through March. March of last year was my most profitable month of 2020. That move lower, any kind of parabolic move up or down is going to be one that's great for traders. And it was probably one of the best periods of time for me to actually get back into rebuilding or adding to some of my longer term portfolios. Okay. So something to think about. All right. And thank you so much for asking. I know it's probably on a lot of people's minds. So whether tech comes back, look at it, look at the segments of tech. Don't just look at QQQ broadly. Look at it through SMH, CLOU, SKYY, XLK, XLY, XLC. All right. Those are all the different components that we would say are tethered to that tech narrative. So thanks for letting me do that deep dive on that question. All right, Beverly, how are you? Long time. Oh, very cool. Join Sector Secrets. Beverly, I'm going to broadcast into the close today, the last hour of the day. I'll broadcast into the Sector Secrets room because I really want to talk more about kind of what editor's question sort of led us to. So we'll be doing that today, 3 to 4 p.m. So great to have you on board the Sector Secrets team. Very cool. Love it. Our little think tank. Not so little anymore. We're growing. Do I still like Juniper? Hey there, Dr. Nutmeg. Yeah, Juniper was one I really liked. I will tell you, we picked a relative performer. It's been holding its own, but if I were looking at it today with fresh eyes, if I were looking at it today with the inkling to want to get in, I probably would not have it near the top of my list. So what I liked about it, say back in here, things have changed. The market's left double green. We see red grab candles. We're testing the 200 EMA. Not that I want to short it, but it's not the same quality buy that it was when I initially was looking at it. So in these situations, what I like to do is, not in these situations, period. When I'm playing the options, I like to think about from a conservative level, because I always have 3 levels that I'm looking to buy at. Get long from in terms of the options. In terms of risk, I can keep a pretty close 15% premium stop on something conservative. If not, I know that whatever I've paid for that option, I'm not going to risk more than 25%. So my risk is known right away. And the only thing that really hurts that is our gaps. And those have happened too. AMC, I'll tell you what, Francis, I'm laying off some of the Wall Street bets kind of names for now. Do I mind AMC? Look, AMC, are we going to have another move from, say, 680 to 20? I don't know. That's really going to be very much something that I would tell you to track what's going on at Wall Street bets. You can use something like Swaggy stocks, SWAGGY stocks.com, and they will have these real-time sentiment trackers. That's a different game. I'm not really playing around with that. I had some great fun with costs. I didn't play GameStop. When we actually talked about this in I think the options room or the futures room. Can't remember which one. But we talked about running what I called my Reddit scan on Finviz. High short interest, sub $20, certain amount of volume, trading above the 200 EMA, things like that. And then just looking to see if that would be something that would fall into favor with Wall Street bets. I've never been in a trade like that. I've been trading for 30 years. I've traded through wars. I've never bought something for about $7, $8 and seen it go to 60 the next day. Never, ever. I don't anticipate having that happen again. But if you look at where the volume is sitting, look at some of those stocks and look at where the volume is, because that should give you an idea of where the diamond hands, the hodlers in some of these names, Game, Cost, AMC, BlackBerry, you can see where they're positioned at. And that would probably be where Wall Street bets would defend their positions and maybe get all riled up and get the troops going again, if you will. Okay. So that's the way that game is played. It's very different than I think what we do sort of in the non-meme stocks. You know what I mean? And by no means am I, saying what they're doing over there. I think it's great. But meme stocks behave so differently. We're rocking some Ethiopian medium roast today. And I threw a little scoop of collagen. A little collagen. Doesn't taste like anything. It's supposed to be good for you. So a little collagen protein in there today. All right. So moving on here. Let's see. ZS and ZC holding so far. That's okay. And that's right at the heart of that reflation trade. And it doesn't require anything really from stonks. I don't need the indices to go up to get beans to go higher. I don't need indices to go up to get corn to move higher. We've got lean hogs on the list. We've got cattle longs. And so, again, I call them the grocery store commodities that are so often overlooked by sort of retail traders because they want to trade the S&P. They want to trade maybe crude, maybe gold. And then a lot of times you guys remember those books? Eat This, Not That. They were very popular for a while. Eat This, Not That. Well, trade this, not that. Right now, gold, until the real yields start to drop, gold's not going to rally. Silver's going to have a hard time too. But you know what's not going to have a hard time? Copper, platinum. These are relatively, look, trading copper and platinum is less expensive than trading gold and silver. Yes, they don't have the popular ETF alternatives, but look, I'm a futures trader and I've been trading futures since I was 15 and a half years old. I love futures. Why do I love them? Because the barrier to entry in futures was pretty low. I could control, 5,000 bushels of corn back in the mid 80s, late 80s for $405. So it was a great market for a short funded teenager who had a love of the markets to start playing. What else what else would I do? I used to write covered calls. I had IBM stock that my father left me, wrote covered calls. Sometimes these old school things we tend to abandon. And to me, the old school markets, like some of these grocery store commodities, are going to do really well. They're going to outperform in reflation, gang. And then look at currencies as well. Yeah, thank you for that reminder. Yeah, they're going to do pretty well. Let's see what else we got going on here. Hey there, Tony. In Sector Secrets, beside the monthly webinar, do I meet? Oh, gosh. Yeah, Tony, I think every trader who runs their own mastery, and, John's got a mastery, Danielle, clearly I do, Allison. We have quite a few masteries. I think that's it. Oh, and TG has a mastery. We all have our monthly get-togethers, but we all spend different amounts of time in the room. Like I know that TG and Allison are quite active in their rooms. Danielle too. And then, I do just weekly Q&As on tech and Q&As on the watch list, because I think the watch list building for me is even more important than in many ways the actual trades, because if we're looking in the wrong direction, we're going to be in trouble. We're going to be focused on the wrong thing. And then because I have a number of tools that are unique to my trading, they're tools that I've either created. They're certainly not tools you're going to find built into most platforms. I spend about 30 minutes a week also getting people up to speed on how to place alerts on different platforms, which is so important. on how to set up my indicators, things like that. So every one of the traders that run their mastery run them a little bit differently. We all do the live trading once a month, but some of us are in the rooms just a whole lot more often. And I'm in there at least once a week, if not a little bit more often. And I'm logged into the chat. So when I say I'm on, I mean I'm on the mic. We have a presentation and I'm in the chat every day. Yeah, because I'm here trading. So why not hang out with folks where we're all looking at the markets in a similar way? Helps me, helps them. I kind of call us our think tank. That's really what I believe it is. We're all trading with the same tools. We're all looking at the same things. And that's what I love about the masteries, each one of them, right? Because you're being taught by someone who says, look, this is the kind of way that I like to trade. These are the kind of tools that I like to use. Let's all be pointing in the same direction, helping each other out. So that's why I love the masteries that we have here at Simpler. All right. So what else do we have here? Let me tackle a few more questions. I thought I missed something on Gush. Did I? Sorry, the questions go by pretty quick. Gush, gorgeous uptrend. Yeah, so this is going to be your 2X. So you're in Gush, or you're looking at Gush. That's great. I'm looking at XOP, 6 of one, half dozen the other. I love where your head's at. Absolutely. As the price of oil goes higher, oil explorers are going to benefit. Oil services are going to benefit. The sector, SPDR, energy is going to benefit. Absolutely. And Gush is that 2X, right? That direction 2X. Absolutely. So if XOP is moving higher, Gush is going to. I haven't looked at Gush in a long time. Thanks for mentioning that one. Any thoughts on airlines? Martin, the reopening trade has been pretty good in airlines and restaurants, and travel benefit from that. What I've been doing is I've been looking at jets. So yes, you mentioned AL, UAL. Absolutely. If you like a relative outperformer within that group, go for it. But because the tide seems to be rising across the board, I'm focusing on jets. Yeah. Okay. And just like that, we are out of time. Mark, makes sense how my husband approaches the market. Yeah, well, that's what I taught him. We place alerts a lot. Wish list alerts. What would be your dream price for a particular stock? Put an alert in there. That's what we do. Getting opportunistic on different parts of the time horizon, for sure. All right, gang, be careful out there. We had our non-farm payroll numbers. It's a Friday. Let's see what kind of mood the markets are going to be in. We are breaking trends. Look for those relative outperformers. Think outside of the box. Think about some of these reflation trade commodity moves. Think about uncorrelated stocks, uncorrelated to the broader averages and more weighted sectors. Think out of the box a little bit right now. Be a little bit more patient, lengthen the time horizon, and I'll see you guys on Monday. All right. Be good to each other.